Hello and thanks for tuning in. Great to have your company here on Kalkine TV. I'm Holly Shields and you're watching The Buzzing Trends. Now, exchange-traded funds, commonly known as ETFs, track an index sector or some other asset for the unfamiliar. They can easily be sold on a stock exchange just like a common stock. Demand for ETFs has increased significantly in the past few months. And these products are generally picked by investors with inadequate funds to build a diverse investment portfolio. Investors can get exposure to several high-potential shares via a single investment. And these funds can easily be sold on a stock exchange just like a regular stock. A few ETFs have seen significant sell-offs lately due to an ongoing stock market uncertainty. Although despite this, a fall in ETF prices has also emerged as an opportunity for investors who could not previously invest in these funds get them at a lower price. So in this edition of Buzzing Trends, let's discuss two ETFs that have suffered a nearly 20% fall in 2021 and are now available at a discounted price. Starting with VanEck Vector's Video Gaming and Esports ETF. Now, this product traded with the ticker code ESPO, and it deals with video gaming and esports. The fund gives exposure to some of the largest companies involved in this space, including video game development companies, hardware, and esports businesses. The 10 largest positions in the VanEck Vector's Video Gaming and Esports ETF portfolio include Tencent, Nvidia, Activision, Blizzard, NetEase, Nintendo, Advanced Micro Devices, Electronic Arts, Nexon, Bandai Namco, and Zynga. And it's important to note that these companies are well placed to benefit from the increasing popularity of video games and esports. Revenue for the sector grew by an average of 28% per annum since 2015. And the VanEck Vector's Video Gaming ETF annual management fees stand at 0.55%. Its price as well has fallen by 28% since the start of 2022. Now moving on to our next ETF, the BetaShares Global Cybersecurity ETF. This product trades with the ticker code HACK, and it's involved in the global cybersecurity sector. The 40 largest positions in BetaShares' global security portfolio include Cisco Systems, Palo Alto Networks, CrowdStrike, Zaylor, Mandiant, Booz Allen Hamilton, Leidos, Cloudflare, and SailPoint, to name a few. Demand for cybersecurity services is likely to rise on a strong note in the future amid rising cases of cyber frauds, providing growth opportunities to the companies which are a part of the fund. And according to Statista, the global cybersecurity market is likely to rise as well to $248.26 billion in 2023, up from $151.67 in 2018. BetaShares Global Cybersecurity ETF's annual management fees stand at 0.67%, and its price has fallen since the start of this year. Exchange-traded funds may be considered as a safe investment option, but in the times of market uncertainty, it's difficult to gauge returns which trigger panic selling, causing a reduction in prices. However, some investors might take this as an opportunity to buy ETFs at a discounted price and hope for market recovery. Well, that is a wrap on the Buzzing Trends, but tune in next time only on Kalkine TV. I'm Holly Shields signing off.